Are you trying to decide between Fidelity and JP Morgan? You're not alone. Today, we'll break down these two financial giants to help you make the right choice. Both Fidelity and JP Morgan offer investment services. They help people manage their money, invest in stocks, and plan for retirement, but they do have some key differences. Let's start with Fidelity. Fidelity is known for its user friendly platform. It offers a wide range of investment options, including mutual funds and ETFs. Many users appreciate its research tools and educational resources. Fidelity also has no commission fees for online trades, which is a big plus for many investors. Now, let's look at JP Morgan. JP Morgan is part of a large banking institution. It offers investment services along with traditional banking. One of its strengths is personalized financial advice. If you want tailored investment strategies, JP Morgan might be the way to go. They also provide a strong mobile app for managing investments on the go. So, what are the main differences? Fidelity focuses more on self directed investing, while JP Morgan emphasizes personalized service. If you prefer to manage your own investments, Fidelity may suit you better. But if you want guidance and support, JP Morgan is a solid choice. When it comes to features, both platforms offer tools for tracking investments, but Fidelity has more resources for research. Pricing is also different. Fidelity generally has lower fees, while JP Morgan may have higher costs for its advisory services. In the end, if you are an independent investor, go with Fidelity. But if you want a personal touch and expert advice, JP Morgan is a great option. Thanks for watching. If you found this video helpful, please like and subscribe for more comparisons.